Good afternoon, everyone. Thank you so much for taking the time, as I say every single Thursday at 2 p.m. Eastern Time, and I appreciate you spending these minutes with us. And most important, I want to make sure you walk away with nuggets, sales ideas, maybe new product info, new carrier. So jot these notes down. Use that Q&A pane. That's part of the go-to webinar software. Okay, I always get some questions in after the fact through email saying, Bill, I wanted to answer your question of the day. I didn't know where to send it, so I emailed you. Well, you're supposed to use the Q&A pane, okay? So you can try it now, just minimize it or expand it, and then you can even put test whatever you want in there, and then Andrew's going to do his best to answer every single comment or question as they come in. If we don't get to you in real time, we will circle back with one of our marketers on the annuity side as soon as we hang up the call. Okay, so we want to hear from you, good, bad, and different. And then, of course, questions. Please feel free. What we're going to do, as always, we're going to have a question of the day that I will ask at the end of the training, which will be right before 3 p.m. Eastern Time. And whoever answers first and correctly via that Q&A pane, I will announce your name and you'll walk away with an Apple iWatch, as long as you're an active Levinson agent. Okay, I think you know the rules by now. And then, like I said, that's going to be right before we wrap up at 3 p.m. Let's switch gears for a second and just talk about where we are as a company, and then, of course, our annuity department as a whole. So things on the annuity side for us here at Levinson, okay, let's say the past 3, 4 months has been about a 15 to 20% increase in overall annuity production. So I just want to say thank you to our agents, right? Because without you, we would never be in this position. The industry as a whole is also up year over year. In fact, I have a slide that talks about the latest statistics that are in, which you can also look up. If you want to fact check, you can do that as well. But I encourage you to check out ChatGPT for any of the annuity numbers, product info, marketing. There's so much available to you now as a resource. So that we do the same thing here in our marketing effort. So I encourage you to do the same. What I want to do, let's go to the next slide here. We have so many new lead programs, technology, new carriers, exclusive products that you can now get access to. As an agent, especially if you weren't with Levinson, you probably couldn't get access to a lot of the new value add prior. So this is a very, very exciting time for us. And I also I want to touch on this for a second. You know, we have over 24,000 agents in the country from Key West to Hawaii, as you know. Some of you focus more on the life insurance side. Some are annuity focused and annuity focused only, which is fine. Some coming from the health insurance side, the P&C side. So I guess the main point here is we are here to help all of you, right? If it's your first annuity case, pick up the phone, okay? Talk to any one of our marketers, okay? Josh and RJ run the department with Ashley and Michelle handling the contracting and new business processing. But the point is, we will literally do everything for you, right, in the back office, except speak to the client. So just know, if you're a rookie, if you're greener in the annuity space, we're here to help. If you're a MDRT pro, you're crushing it year after year, we also have new technology and new lead programs for you that you'll love as well. And oh, let me throw this out there: a new E&O program, right? Think about this for a second. We never had this before. So an E&O policy that now covers B-rated or better carriers for you on the annuity side. So $295 a year is the starting price. That's insane. I've never seen that in my 24, 25-year history. So run with this stuff. Leverage the tools, the programs that you can't get elsewhere, period. So the industry as a whole, right, for everyone, all across the board is up, like I said. And if you're not part of this in any way, you need to be for 2026, okay, to supplement your income, to drive your income, to change the outcome of the year. You got to dip your toe in the water. And I think most importantly, your clients, if you're not bringing this up, they're probably buying product from other agents. Okay, so again, know enough to be dangerous. I think the proof is in the pudding. Like I mentioned, the latest stats through LIMRA, and by the way, like I said too earlier, full circle, Chat GPT, type away. When we finish up today after three, put in some of this criteria, okay, in stats, and you'll see where, right? Let's say certain products. Where's the business coming from? Is it the hybrid space with annuities and long-term care and a death benefit built in? Is it in the MIGA or FIA space? Okay, and what part of the country and what income range? Okay, so an age range, so you know where to market and target, right, with demographics. And if you're using our agency automator database, you know what search criteria to put in. So the opportunities are endless. The point is, you're in the right place, and this is the right part of the industry. Let's keep moving forward. What I want to do next is talk about what's most important to us here at Levinson. It's our agents, right? We don't sell on a retail level whatsoever. Okay, we are 100% wholesalers, distributors. So you are our number one, right? When you think of Valentine's Day around the corner, right? We love our agents, our customers. So when we see testimonials, reviews come in like this, okay, in the top left-hand corner, that's my dad, Carrie. I just saw she got approved for Preferred Plus. Thank you for that Levinson magic from Dennis, which, by the way, I see Dennis is on the call today. Thank you for sharing, Dennis. And then on the right-hand side, Mir, Ashley, thank you for your excellent support throughout the onboarding process. Ashley heads up the contracting department for annuities. So please keep sharing. Go to our Google review link or our Levinson Facebook page. Okay, leave a comment, a little testimonial, and we'll send you a prospecting book. Okay, if you're an active agent, it's on us, free. Okay, so everyone's a winner today. Please keep sharing. It means everything to us. Let's move forward to our expo, our big powwow of the year, which, by the way, I hope you already registered. If you haven't, please do so as soon as possible because we are capped at 300 agents in the room. It's by fire code per the hotel, so we cannot extend out that 300, even one or two more agents, period. So just get in that RSVP. It's complimentary. Okay, and you already know we do a nice breakfast in the morning, a networking lunch, snacks throughout the day. We bring in our core carriers, and it's a first this year. And here are a few bullets I want to share why it's a first this year. So we've done this, as you know, for about 20 years now, and except for COVID, right? We did have to take a year off, unfortunately. Point is, we've never had an annual agent expo focused on all three parts of the industry: life, health, and annuity, right? Equally. Okay. It was always more weighted on the life side. And then, of course, we had our annuity department there. But this is the first time it's going to be a true life, health, and annuity and leads expo. Okay. So the point is one stop shop. By the time you leave there, you'll have everything in your toolbox so you can go out and have the best year ever. It's all about sales strategies. You can walk out that door, make more sales, and again, change the year. Okay, so make sure you are registered. We have a special guest speaker as well from the Forbes Business Council. Also, an AmeriLife executive will be speaking. So it's going to be a great day that you don't want to miss. Let's keep moving forward. What I want to talk about next is our annuity department. So 100-foot overview, RJ and Josh handle annuities for us on the marketing side. Michelle is involved with processing and compliance. And then, of course, Ashley handles all of the contracting and education part of your annuity training and sales. On the left-hand side, you're going to notice we have over 35 direct contract carriers, the best of the best. As far as I'm concerned, any type of annuity, we have it. All of the quoting engines, the sales platform. In fact, we are literally launching a new sales platform that is amazing, 100% complimentary to our agents. It's called Luma. We're only a few weeks out. We're going to have a kickoff training. Make sure you are on. Even if you've never sold an annuity in your life, you have to be on this training. Why? Because what this does, it simplifies the annuity sale for you. Okay, and literally gives you a customer presentation in about 3 to 4 slides and breaks it down in layman's terms so your customer understands the upside, the downside. What are they walking away with in 5 years? What does a 10-year income stream look like? It's unbelievable. And again, it's free as long as you're an active agent with Levinson. So you got to run with this stuff. Between RJ and Josh, they have over 60 years of combined experience, primarily in the annuity space. So we have, again, everything you need as a one-stop annuity shop. Let's keep moving forward. What I want to do is introduce my friend, Coach Chris, and I just want to just give him a kudos here for a second. I'm sure you've been on various webinars and trainings where we'll have the VP from the ABC company, right? And that VP is going to push their products and say they're the best, right? And he obviously has a vested interest. Coach Chris is a independent consultant. So he's giving us the 100-foot overview on the entire industry, okay, on all products and carriers. He doesn't care if you happen to write this carrier or this company and this product. No, he's giving you the 100-foot. He's going to tell you what's hot, what's not. Okay, he's doing this out of the goodness of his heart to help our agents 4 times a year, and this is the first one, Q1 2026. So, Coach Chris, you want to take it from here?
Thanks so much, Bill. Great introduction, man.
Yeah.
Really appreciate it. Always very happy to be here, guys. We do this quarterly, and every time I feel like we get something new out of it, or new agent, new questions, new things. So, always appreciate everybody's time for being on here, and Levinson and Associates for having me. Thank you guys so much. And I saw that hashtag that you had there, Bill, stack the bricks in 26. That's pretty impressive. So I know, and it sounds like that expo is going to be pretty outstanding. So definitely register for that, folks. It looks amazing. But let's jump right in here. Absolutely. Let's jump right in here. I really am going to hammer 3 sales ideas. I wanted to change a little bit of how we do this, because if you've been watching these quarterly visits here about annuities, I usually focus on some products, some new pieces, things like that. I really want to hammer on what successful agents are doing. And yes, some products will go into that as well, but I think you're going to find that the product itself matters less when you're having these strong sales strategy conversations with your clients. Even just asking the questions, dripping it out there, even if you're not an expert in these things, that can start to raise interest, and that's where the folks at Levinson and Associates can absolutely help you out. So let's jump right in, guys. I want to talk about 2025 and the outlook here for 2026. Things continue to look strong. Like Bill said, I mean, that's impressive, Bill. 15 to 20% growth that you're seeing here on the annuity side. In the industry, you're seeing growth happen as well, and things look to continue to be very stable and growing here in 2026. This sentence here came from LIMRA, that they're expecting sales to surpass 450 billion in 2025, doubling sales from just 5 years ago. Looking for product development, technology-driven efficiencies are going to continue to grow things here in 2026. So really an outstanding outlook here, and there's several key drivers powering that type of growth. We talk about this number a lot. If you've had any time in this industry, you've seen that 10,000 Americans are turning 65 daily. That's that retirement age. That's that goal retirement age for a lot of people. Money's in motion too. Over 2 trillion in maturing contracts provides massive opportunity for repositioning. Now, that's not necessarily just annuities. That's CD contracts. That's a lot of different moving parts of contracts that are maturing. That's life insurance contracts. That could be 1035 to annuities. There's so much potential of maturing money that can be moved into annuities. Product innovation, technology advantages. We are seeing some really unique products that in this higher interest rate environment that we're in compared to, say, 2019, 2020, carriers are able to get a little more creative with the things that they're making, right? So it's creating a really interesting conversation for folks that we can have. And today's annuity buyer hasn't changed. The average age is between 62 to 72. Their biggest concern is still outliving their savings. I did not credit a source here, but this was coming from LIMRA, by the way. Average age 62 to 72. Main concern, outliving their savings. Preference is balances safety and growth for these folks. These are all ticking boxes for annuities, right, guys? But when I look at this top paragraph here, people are much more savvy. Bill just talked about ChatGPT. He just talked about AI and some of these tools that are out there. It is really easy as a client now to do your research, to do comparisons of products, to hear the name of a product and look it up and find quite a bit of information online or using AI resources. And that really just means that we as agents and advisors have to be on top of our game, right? We have to be ready to have multiple options for folks, whether they're looking for long-term care or annuities or life insurance, or if you manage money. It becomes where we need to be a little bit of an expert in a lot of different fields. And that's kind of what we were finding from this annuity profile that I got off here from Limra. Now, market volatility, guys, creates opportunity. I'm just jumping into some different topics and trends that we're seeing. We're seeing some market volatility now. If you look at the S&P on this bullet point one, we had 17.9% growth in the S&P in 2025. Outstanding. If you had some of these annuities have 10% caps on them for growth, some have up to 12% caps to the S&P. If you had an annuity with a 12% cap to the S&P, your client would have gotten 12% to their annuity each of the past 3 years. So we are seeing some excellent growth, obviously, in the market, but that creates concern for a lot of folks, especially if they're in that grouping of the 10,000 turning age 65. There's tariff uncertainty. There's inflation concerns still. Unemployment fluctuations. I think the newest jobs report just came out. It trended to be pretty good this time. That's fantastic, but you're still seeing those fluctuations happen, and who knows what AI is going to do and things like that. There's a lot of concern out there is what I'm saying. Then you have interest rate changes, and we don't know what's going to happen, but I bet my money if they go any direction, interest rates are going to drop here soon. So that creates a little bit of that urgency of the annuities that we have available. Your clients need to be considering locking in some great rates before any interest rate drops do happen. And look at that segue. How about some great rates that are out there? I took some MIGA rates, I put them here in this sheet. Folks, this is assuming your client has $100,000 or more, and I'm looking at rates in Florida specifically, so just keep that in mind. There's still some outstanding rates out there. And if you're comparing to, some of the competitive carriers there that people are captive to, or you're comparing on bankrate.com to CD rates that are in the area, annuities still look very good. If you're in other states outside of Florida, there's some rates over 6% available as well. Or maybe you have non-resident licenses in some other states. There are several offerings for 6% plus out there for MIGAs. And what client wouldn't love to get a guaranteed 6% for 3 years, 5 years, 7 years? We're very close to it here too with some of these rates, but absolutely, you're seeing a lot of popularity even in those 10-year products, getting you close to 6%. Just comfort, peace of mind. Your client knows their growth that they're getting, and they can better retirement plan in the future. That's still what MIGAs can do for you. But as I promised, I wanted to go into 3 big fixed annuity sales ideas for 2026, guys. And these are proven strategies. These are things that agents I work with are doing. These are things that I do. These are things that I hear $10 to $20 million producers are doing. And I want to kind of flirt with these ideas with you guys, show you some of the strategies that are out there. And then any questions you have, you can take it to Josh, and you can take them to Bill and RJ. And I'm sure anyone here at Levinson can absolutely help you out. And the first one I want to start with is annuity refinancing. I've talked about this before. It's still going into this year. I've actually helped 2 agents with something like this just this morning. So opportunities in your client's existing accounts. You ever go into a home and a client says, "Oh, I already have an annuity." And in the old days, this would mean that your annuity sale's dead. If you were in maybe 2020 and somebody already had an annuity in a surrender charge period, there wasn't much that you could do with it. But now there is so much opportunity, guys. And you might be wondering, what is annuity refinancing? Well, you're reviewing old contracts. You're comparing rates and features to new products that are out. Remember, that's us talking about that product innovation that's come out. There's a lot of unique annuity products, a lot of competition out there too. Comparing rates and features and upgrading your clients to better products. Fixed annuities purchased between 2014 and 2022 locked in historically low interest rates. The case I was looking at earlier was a case from 2015. This guy had a 1.1% fixed rate on his annuity. He's been allocated to that since 2015, getting 1.1% growth in it. If you can show that you can move them, even though that annuity is in a 14-year product, painful to hear, I know, even though that annuity is in a 14-year product, you can move it. There's fixed accounts now in index products over 5%. That's a no-brainer. There's the potential to get 10 to 12% caps to the S&P. These are no-brainers. These are easy moves your clients should be making, and you can help them do that with a full commission. It's really a win-win scenario. So why these things are working? Higher interest rates are available today than before. The cost of inflation, old contracts are losing that purchasing power. Maybe a fixed rate of 2-3% was decent in 2015, 2016. It really wasn't, but maybe it was compared to other products back then. It's especially not okay now. There's new product features, and guys, the most important thing when looking at old contracts, maybe your book of business, maybe a client that you've walked into their home, you're having a discussion about anything else, whether it's Medicare, life insurance, mortgage protection, assets under management. You have warm prospects. You have people with annuities. You have your own people you've sold annuities to that might be needing to look at a new product. And folks, there's a lot of things you can do out there. What's unique about today compared to 2019, let's just take that year, is that you have big bonus products now on short-term surrenders. So you have, for example, 5-year products with 9.5% premium bonuses. So let's say you have a client who bought a 10-year product, they're not happy with it, they're 5 years into it. You don't want to just go turn around and put them into another 10-year product. Maybe they'll look at that and say, I don't want to be locked into another 10-year annuity, but they have an 8% surrender charge on their annuity. Well, you can get them a 5-year product with a 9.5% premium bonus and likely better rates than they had 5 years ago. That's the power of conversation. And all you have to do, folks, is visit with your client, get their last annual statement from their annuity, send it over to Bill, send it over to Josh, send it over to RJ, whoever you're working with. They can do a breakdown of the product and find the best fit for you. And folks, to do this is easy. Now, I'm not going to go over all these steps, but basically, when you do an annuity refinance, you have to put a letter of intent, for the client. You need to verify that the new client's going to be good for the client's needs. You need to put a letter of intent in there. You need to compare the fixed rates and S&P rates and why it's going to be a good move for the client. If there is a surrender charge, if there is an MVA, you need to use a premium bonus to offset that surrender charge and MVA. Maybe detail how the client's circumstances have evolved. Maybe they're in a product that they just simply don't need anymore. Explain how things have changed for the client, and then get a signature and date. And there's a little pro tip there at the bottom. That well-documented LOI is going to protect you and the client. And it's going to really establish what the client's needs are when doing that annuity refinance. Now, I did say I'm not going to focus on products, but there's a lot of good products for this type of thing, folks. But everybody has different rules. So I'll tell you, like I'm looking at Revel 1 there on the left-hand side. They got a 16% premium bonus, an S&P cap of 5.5% right now. They'll look at annuity replacement that's only a year old. They will replace an annuity that's just 1 year old. Then you have your A- rated carrier there in Exonic, a 16% premium bonus up to a 23% premium bonus if you add the fee to it. This product looks outstanding at a 6.75% S&P cap. Now, I think that cap drops here in 9 days or so to 6.5, but that's still solid for a product with a 16% bonus. If you can make the case right, if your client's in a product they're unhappy with up to a 15-16% surrender charge, you can get them in a product with a much better S&P cap right here. And let me assure you, the ones that I am looking at, some of these caps on these products are 4% and below. So if you can show that your client comes out ahead day one with the premium bonus and your S&P cap is better, that's an easy win. That's a new sale for you. That's your client in a better position as well. Equitrust has the market power. That's always been a great one too. But the point I'm trying to make here is Equitrust won't look at any annuity that is that's been issued in the past 3 years. It has to be 3 years or older for Equitrust to do that move. So basically, folks, what I'm saying is there are different rules behind doing this, and the folks at Levinson can absolutely help you out. All you have to do is provide an annual statement to Bill, Josh, RJ, any of the folks that you're working with, and they can take the ball and do the rest for you. So that is annuity refinancing. Bill, I want to stop right there and just see if we had any questions real quick.
Okay, let me see if anything came in that Andrew didn't answer. Just give me 1 second here. Andrew, are we okay?
We are all good. All questions answered.
Beautiful.
Okay, let's keep it going.
Let's keep it going. Strategy number 2, Roth conversions. And you all may be hearing this. I had a call yesterday with a guy who's been in the business for 24 years. He's out in Mississippi, and he had no idea how these Roth conversions worked. He hears the buzz. He knows it's out there. He knows clients want it. And there's a lot of confusion about how these Roth conversions work, because if you've been in the industry a while, you know that you can take in a 401k, convert it to a Roth within an annuity. Easy. But there's a new thing that a lot of these carriers have that I want to show you right now. But folks, I will say this, as far as Roth conversions go, this email blast to clients, just putting that in the subject line, getting the attention out there gets so much attention from clients that they are very interested in learning more about Roth conversions. So you need to have a good understanding of them. Why Roth conversions make sense, folks. Obviously, if you know anything about these, it's tax-free future growth. Converted funds grow tax-free. It's fantastic. It's a great way if your client believes, if you believe that we are at a very low point with taxes now and taxes are only going to go up because of the national debt, consider a Roth conversion. And many of your clients have this concern. Roth conversions eliminate RMDs. There's tax rate arbitrage. There's tax diversification with it. Estate planning benefits. Beneficiaries inherit Roth accounts tax-free, folks. Survivor's penalty solution reduces tax burden for surviving spouses who face higher tax rates filing single. There are many benefits to this. You don't need to be an expert in all of these things. What you need to know is that your clients want to think about doing a Roth conversion. You need to help them get there. And there's an easy strategy using annuities to make this happen. Now, important Roth conversion considerations. I do want to mention, of course, if you're taking somebody's 401k or IRA and moving it into a Roth, that does create a taxable event, right? You're creating a tax event. You're taking qualified money. You're moving it to a Roth. There is an upfront tax cost. You do have to have the money in the Roth for 5 years before you're able to take those tax-free withdrawals. And then there's a cash flow requirement, right? You can't have your client throw all their money into the Roth. They have to have funds from non-retirement accounts to be able to pay taxes. And once again, I'm always going to say this, use a tax consultant, have a tax consultant you know. If your client has someone they want to talk to about this, very important that they get everything straight before jumping into this. But it is a conversation people are having. This story really resonates. If you email blast your clients, if you post on social media, Roth conversions are going to get hits. They just are. They're a hot buzzword right now, and you need to know how they work. And I did put here carrier advantages matter because, folks, they do. Not all carriers handle Roth conversions equally. Okay, you want to look for carriers that do mirrored contracts, maybe have premium bonuses available and flexible transfer options. What the heck is a mirrored contract, you might be wondering? Well, I want to go into that a little bit and just do a real world application case study. And by the way, you can have these slides too. If you want these, if anybody requests them, just let me know. Happy to share these with you. Let's meet Matt. Roth conversion case study. Matt is concerned about reducing his future income tax burden in retirement. He wants to benefit from strategic Roth conversion advantages. Basically, Matt's a super saver. Matt's got a lot of money saved in qualified accounts. He wants better control over when and how he's taxed. He doesn't want any income limits on conversion amounts. He doesn't want to do RMDs. And he wants to maximize a tax-free legacy for his loved ones. All of these things can be done with a Roth conversion here. So let's focus here on the left-hand side, the conversion process. Matt completes one application for $1 million and checks the partial Roth conversion box for $100,000. So the funds move from his 401k to Roth IRA seamlessly. 2 contracts are issued. There's a mirrored contract. There's a traditional IRA and a Roth IRA. So folks, if you're paying attention, this is Matt's $1 million solution. He takes one application. You, the agent, are writing a $1 million annuity here in this example. And then from there, they're creating a mirrored contract as a Roth IRA. Now your client, Matt, here can take $100,000 over the next 10 years and move it to the Roth IRA when he wants to. So now he's converting his money to a Roth to get that tax-free growth in a mirrored contract. Now, why is that important? In the old days, you had to take and say, Matt, you want to move $100,000 over to a Roth? Well, let's do that each year for 10 years. Well, maybe the next year, Matt doesn't want to do that. Or maybe the next year something happens and he had to use some of that money for a family emergency. This allows you, the agent, to take that $1 million of qualified money, put it into an annuity now, get paid that commission on that annuity, and it creates a mirrored contract for Matt to now be in full control of his taxes and what he moves to that Roth IRA. Matt wanted full control over his tax bill. Now he's got it. He can move that money from that qualified annuity into that Roth IRA when and how he chooses. No maximums, no limitations on when he can do it. It's a great way to help that person create that Roth IRA that they're looking to do to get that tax-free money in the future, folks. And it's very, very easy to do. Roth conversions make simple. Complete one application. Simply check the box for partial Roth conversions. Receive 2 contracts, a mirrored traditional and a Roth contract issued automatically. And from there, the client controls conversion timing and the amounts between the contracts. You've made the sale at this point. You've gotten the full amount. It's in the client's hands, and they can work with the carrier at that point to decide when and how they do that Roth conversion. It's an amazing system, and not all carriers are the same. I kind of mentioned that. There's a handful of them. I'll name a few of them. Equitrust, for example. Lincoln will do this. Athene, just to name a few. They have that mirrored contract program. So when you're looking to help someone with a Roth conversion, make sure they have the ability to do mirrored contracts. Some carriers do, some carriers don't. It's a huge tool. It's an excellent way to help your clients. And again, it really works on that buzzword right now that is Roth conversions. Now, I'm sure you have a lot of questions about this program. Have some excellent pieces that'll be available for you. And Bill, I'll shoot those over to you as well to be able to share with any agents with further questions here on Roth conversions. In the meantime, do we have anything you'd like me to help answer?
I think we're okay. And what we'll do, Chris, right when you're done, we'll see if anything came in we couldn't answer, and we'll do that live.
Okay, that sounds good. Beautiful, guys. So that's been a huge strategy. Now, the other one is income annuity replacements. And this one isn't going to take long because I think, you might wonder why I didn't put annuity replacements and income annuity replacements all in one. Well, they're a little different conversation here. And what I like about this is if your clients are already receiving an income out of an annuity, they can still look to do an income annuity replacement. It's the same story. Income today with today's products in this higher interest rate environment than 4 or 5 years ago and beyond, interest rates are higher today. So income payouts are higher today. In doing a comparison, I have an example written down here. Had a client in Illinois, 71-year-old female. She has 158,000. She's had an annuity in force since 2014. It's in a 14-year contract, by the way. 14-year contract. Guys, don't sell 14-year contracts. I'm just going to throw that out there. She had a annuity in a 14-year contract. It has $158,000 in it. Now, it has a roll-up rate of 6%. It's now at $269,000. The payout factor is so low that the client's going to get about $14,000 of income per year. If we move that $158,000 into an annuity today, you can get that client $16,000 of income right out of the gate. Folks, $14,000 of income guaranteed or $16,000. If you show your client a simple spreadsheet, even though they've been developing and growing this income base since 2014, we can beat the income day one on this product because products today have higher payout factors. They have premium bonuses. Products today have better roll-up rates that are compound interest roll-up rates. Better products, better growth capability as well. And because of that, you can do income annuity replacements. That sale is a no-brainer for that agent. That agent did not write that original case. And now they're able to go back to an annuity from 2014, even though it has a surrender charge, and replace it because it offers better income in a new product today. It's an amazing strategy, guys. And you want to think about things because I love to have this conversation. I love these slides here. You want to think beyond the 4% rule. I know we have a lot of different folks in here. Maybe we have some folks who manage money. Think beyond the 4% rule. It's a great place to do as a starting point, right? The 4% rule, taking 4% of your money out and still being able to grow that money at the end of the day. You know, modern income planning considers many specific things: individual spending patterns, healthcare costs, inflation protection, legacy, tax efficiency strategies like the Roth conversions that we just discussed there, guys. Think beyond the 4% rule. And I say that too because many of your clients still believe in the 4% rule. Well, the bar has been changed a bit. And a lot of these annuities have payout factors at 6, 7, 8%. If you're able to show your client that they can get a lifetime income based on 6, 7, 8% of their money in that annuity, now you've completely changed that conversation. Start with the right questions. How much income do you need every month to feel comfortable? Notice this frames it around lifestyle, security. You're not even talking about products right now. You're talking about solutions. Then you want to get into what they have as essential expenses. I like to focus with folks on housing, utilities, food, insurance, healthcare. Those things need to be covered. What an excellent starting point to find out how much your client needs monthly to feel comfortable. Maybe that annuity that this client bought in 2014, it's providing what, $14,000 of income, I just said, per year? 14,000, is that really going to cover what they need? Do a breakdown. Create a little sheet. How much do they spend in housing, utilities, food, insurance, healthcare? Where does that 14,000 get them? Let's reevaluate with better, fresher products. And you're having a great story right there to have that conversation. I put out at the bottom here, integrate Social Security strategically with your overall income plan. You know, consider that. If you're dealing with senior clients, consider what Social Security is going to come in, total it up, see where you can best fit and help your clients out. Having that income conversation is absolutely crucial. And guys, lifetime income is risk management. You know, at its core, what is insurance? It's transferring risk from an individual to an institution. And longevity risk is your client's biggest fear. That was on that LIMRA profile that I put in there at the beginning of this presentation. Your clients are afraid of outliving their money. Show them how an annuity can protect them. And if they already have an income annuity that they purchased, like this example in 2014 with $158,000, you can show them something better. You can spreadsheet that income. I know the folks at Levinson have the ability to do that for you. You can show them the best options available in the country, higher income today, and it's even possible to move in an income annuity that is already paying income. That is possible too. So income annuity replacement opportunity, guys, you can replace those other contracts. Guarantees make it easy. You know, we're not talking about hypotheticals like in that strategy number one. We're not talking about, oh, maybe they'll get a 10% cap. Maybe they'll receive this hypothetical growth in the annuity. This is guaranteed lifetime income. It is contractually guaranteed that the company pays that out. That makes for a much easier conversation. Superior payouts are available than before, and then you have purpose-built products, which I just want to take a second talking about here, folks. Maybe you've noticed, maybe you haven't, but there's a lot of new annuities coming out. And I'm going to use American Equity as the example here. American Equity has always been a leader in income annuities. Like Bill said, I'm not tied to anybody. Notice we're spreading the love here, talking about a lot of different carriers. American Equity's Income Shield, that's always been a very strong product for income. So what they've done is they've created a bonus version, the American Equity Income Bonus 10, with a 14% premium bonus at issue. Folks, why would they create a second income product with a 14% premium bonus? Notice I didn't say rider bonus, premium bonus that's available for this exact reason. Income replacements. The ability to say, oh, this person can get better income today, but they have a big surrender charge. Well, how do you get around that? An income product like the ones on this screen with a premium bonus to them. That's how you get around it. American Equity, 14% premium bonus at issue. You got a couple different options of income riders there, 10% simple interest for 10 years, 6.5% compound interest for 20 years. American Equity does have those wellness benefits, the ADL doubler that doubles your client's income if they can't complete 2 out of 6 ADLs for a period of up to 5 years. That's why that exists. The Equitrust Market Future. This is an improvement they made on this product just last week, by the way. So you're getting it hot and fresh here. They put an 8% premium bonus on it. Why do you think they did that? So you can easier replace old income annuities with a surrender charge to it. If you can alleviate some of that surrender charge and show higher guaranteed income, that's an easy replacement right away, folks. So you're starting to see that happen now. There's only a handful of products now with true premium bonuses, not rider bonuses. And you're seeing 2 examples of that right on your screen here. So consider that when you're talking to a client who already has an income annuity, or maybe has an income annuity like a fixed index annuity with a really big income base built up over the years, you can still likely beat that income. Folks, I hope that was good. We had 3 sales strategies there, 3 different things that are really working for producers who do 10 million plus between the Roth conversions and the 2 different annuity replacement ideas. You can see with the annuity replacements, there's a couple different ways you kind of have to talk about those and some different products you have to use. That's why I wanted to separate those out. But to wrap things up here, annuity news you can use. I wanted to put a few of these programs that are out there. I try to always share some of these so everyone's in the know. Let's focus on the left-hand side here, American Equity and Annuity loyalty program. Notice what I said there, American Equity and Annuity loyalty program. Because of their relationship with Brookfield, which is a private equity firm that purchased both companies, they are merging powers quite a bit here. So it's kind of an interesting fact. If you haven't seen that, look it up. So American Equity and Annuity have changed structurally a little bit. They have a little different way of doing things now, but they have merged their loyalty program. So if you do sales with American Equity and Annuity, that production goes toward the same loyalty program. Really cool. And like I said, American Equity has strong income products. Annuity has really strong accumulation products. And I think that's the way they're going to keep it too. So the ability to get up to 150 basis points more, really good opportunity there using 2 different carriers. Equitrust, they just announced that they are doing a 3% additional bonus on all of their bonus products, which is really nice. They've had that for a little while now. They just extended it out to March 31st. So you're going to have those higher premium bonuses still available on their products through March 31st. And then the Lincoln Level Up 2026 program, similar to that American Equity program, up to an additional 1.5% commission. There's different production tiers with both of those programs. So it's not just 1.5%. You got to sell your way up to that. The folks at Levinson will have all the information possible for you, but you do want to know about those programs. Lincoln is one of those carriers that does a great job with their mirrored contracts for those Roth conversions. They have some of the best tools available for that, folks. So use those things, use the folks at Levinson. I know they can help you out. And as always, I really appreciate everyone's time. I'm happy, Bill, to answer any questions you might have, or the folks at Levinson, or anybody on the call as well.
Chris, that was great as always. Thank you so much. Let me circle back. Let's see. Andrew, anything that you didn't get to that we need Chris for before we wrap up here? I got about 10 minutes left,
Yep.
by the way, and then we'll get everybody out a little early.
Yep. I just have a
Anything,
couple quick
Andrew?
questions.
Okay.
Yep. So we have Susan is asking, with Roth conversions to heirs, is there a 10-year rule of liquidation to spend it out?
So that's more of a Secure Act question that you're asking. And no, my understanding is that you are avoiding that 10-year rule to heirs when you are doing the Roth conversion side of it.
Excellent. Okay, next question is from Robert. He's asking, what are the cons or negatives of doing an income annuity replacement, if there are any?
Yeah, the cons of doing an annuity income replacement. So the biggest con, in my opinion, of doing an annuity replacement, and you know, that's a great question because not everything is so cut and dry, right? I wish everything was black and white, like get the better income, do this. When you're looking at an old annuity, I'll give you an example. The example that I looked at this morning with the guy, I'm looking at it that I wrote down, 158,000 was the surrender value in that annuity that we're able to move. He had 180,000 in there. Now think about that. That annuity is from 2015. I have issued 2015 here, and he's going to take about, what was it, an 11 or 12% surrender charge on this thing. Whew, that's pretty big. So you want to make sure the goal for the client when you're doing an annuity income replacement is still the same, income. That needs to be their goal, because you can get your clients an outstanding lifetime income by moving it, even with a surrender charge, to a different annuity. You can beat the income day one a lot of times. Sometimes it takes a year or two, but depends on the client's goal. Make sure their goal is income, because there probably will be a surrender charge there on that old product. So to me, that would be the primary con there. But if, again, the goal is income, then it's a great move to make for the right client.
Perfect. Last quick
Okay.
question, then we're done. One last, Al is asking, can a client increase their income midstream? So after they've already turned on income, is there any way to increase it after that point?
You know, for most of these products, no, if they're level income products. If they've already started income, no. But there are different products out there with step ups and inflation riders, or maybe they take the credits earned from the interest and apply them in a multiplier to the benefit base. That does exist. So let's say you have a product, Allianz is great at this, for example. Corebridge even has these benefits where if the index is performing, the client can get a higher income down the road than what they originally started at. So just make sure you're looking for those, like Athene, it's called earnings indexed income. F&G has an option 2 income. Allianz has increasing income with the ABC product. Things like that will have some increasing income opportunities for you.
Great. Very interesting. All right.
Excellent.
Good
All
stuff.
we have, Bill. We're good.
Okay. All right, Chris, thank you again as always, and make sure you'll see our invites for Q2, 3, and 4 as well, okay, for the balance of 2026. Make sure you register, and we're going to keep doing these because agent feedback has been excellent. So thank you again, Chris, and everyone else. I got about 5 to 7 minutes, and then we'll do our question of the day. Okay, so moving forward, let's go to how to get started. So if you are with us currently, most of the carriers, you can use Sure LC, which most of your info is saved in there, and you can add anything outstanding. And then, of course, questions with education, certain carrier requirements, lean on Ashley K in contracting. She can help you with that. And then, like I said, Michelle in processing, and then, of course, RJ and Josh. What also, Chris mentioned this with 2 carriers, Anico and American Equity, how you can combine production, right, for various incentives. And it made me think of our expo, because now all life products, all annuity products, all supplemental products count towards your complimentary 2-bedroom suite, oceanfront for the expo, round trip airfare. So, in fact, up to 2 nights at the 2 bedroom suite, and we pay for round trip airfare. So, combine all applications, all premium, and qualify for the expo. And then, of course, it's complimentary. Don't forget if you've never even written an application with us before. So, you got a day of sales ideas. Let's keep moving forward. I got a few things to discuss about leads, social media marketing. I'm going to show you 2 examples of what's working great for others. So, some really good stuff. And then, of course, the Apple iWatch giveaway. So, just hang in there. Almost done. Um, 2 annuity e-application platforms that are now available to all Levinson agents, of course, complimentary. Left-hand side is Firelight. So this is our newest e-app platform. In my opinion, this is the best annuity e-app platform available today. Makes your life so much easier, right, than printing 62 pages of paper, and then you miss something, you have to go back to the client. So I love this because it gives you that no-go, or the green little check means all go. So that means submitted and good to go. Right side is Affirm by iPipeline. So Affirm for Annuity by iPipeline. So that is built into our website. In fact, both links are built into the Levinson website, and it's totally up to you. You can use either platform. What's so cool about this is the new Luma platform, which is on the next slide, is integrated right into Firelight. Okay, so what that means is you'll put in some basic client data, right, to show a consumer illustration or presentation. And then let's say that consumer says, Bill, wow, I want to move forward. This is great. Let's fill out the application. Okay, you press another button, go right into the e-app on Firelight, and it populates all the data. So you fill out anything missing, hit the green check mark, and you just submitted a new annuity e-app. Okay, and sold, obviously, a new policy. So love the new tech. The Luma platform is rolling out, like I mentioned earlier, 2 to 3 weeks, and all of this is free as long as you're active with Levinson. Let's keep moving forward. What I want to do next is, and I know Chris touched on a lot of this. I think he stole my thunder today. No, he didn't. Usually it's the other way around. But anyway, the tax season is here for 26, and these are 3 great bullets. Limits have increased for 26, so the time is now. And I'm going to show you some great social media posts that you can use to spread the word, right? All it takes is one like, one message, right? One share, and that's a new person you can reach out to, a free lead to say, hey, you clicked on my Instagram post or LinkedIn ad, okay, or Facebook ad, whatever it is. Let's keep moving forward. I want to talk about this quickly, and then we're almost done, and we're going to be a little early, like I said, which is great because every single webinar this year has been on time, and I'm loving it because that was one of my goals. Okay, this is great. So if you're an agent with us today, or let's say you're a GA and you want to recruit other agents, right? You need a ton of value add, right? Why should these agents want to work with you? So you always have to be thinking like that. I have to be thinking like that to make sure our agents and GAs and BGAs have everything they need to be dangerous. So what I love, if you haven't checked it out yet, we have a 100% exclusive platform just for annuity sales, a 101 course, if you will. It's a 3-part series. When the agent is done going through all sections, at the end, they get a certificate of completion. That means they're a Levinson and Associates annuity sales professional. They're now ready to hit the streets. So what's so cool about this, number one, it's free, and you can use it, like I said, for yourself or for any downline agents. Think about the health insurance space, the P&C space, right? The life insurance agent space. You're recruiting in those areas, right? And those agents want to learn how to sell annuities, right? There's no better course than this, and it's free. So you got to think like this. You got to leverage our platforms, and we're building out the same exact thing on the life insurance side now as well. That's also going to be baked into the same dashboard. So I love this. There's going to be a Life 101, and then the Annuity 101 is up and running today. If you want to check it out, let us know. We'll get you up and running 100%. Let's keep moving forward. The next series in the dashboard, and this is great. So obviously, Chris is one of my favorite annuity coaches. So is Charles Samuel, right? He is awesome. He was at the expo last year. Great presentation. So he sat down with us and a handful of pilot agents of ours, and we did an 8-week workshop. We recorded everything, and it basically takes you through the entire sales process with a consumer from A to Z. Okay, the napkin presentation is great. He has a 60-second napkin close, amazing. I love his style, and this workshop, by the time you're done, it's about 7 to 8 hours of material. You truly are a annuity sales pro, and you'll have a ton of new ideas and strategies, I promise you. So this is also, like I said, it's part of the annuity sales dashboard. Let's keep moving forward. Leads, and more leads, right? Everybody wants to know more, and they want to make sure that the pricing is discounted, right? And that these third-party companies are reputable. They have great agent ratings. So we have done a lot of the homework for you. And we do have a new system now called LeadStar that is awesome. They have annuity mailers. They have a seminar platform. I encourage you to check that out. This is another third party that we use. All of this is co-op discounted pricing. Basically, you're riding the coattails of 24,000 plus agents instead of, let's say Bill Levinson out of Cedar Rapids, Iowa, calling this third party company trying to negotiate a good deal. Okay, it's like Costco versus the neighborhood supermarket. So take advantage, again, leverage our platforms. Very, very important. And then once you start writing with us, if you look at the left-hand corner, okay, you'll see diamond level, platinum. So we will actually give you marketing dollars to purchase leads, E&O, maybe social media ads, whatever you want to do with it. Okay, so marketing dollars for you. And again, there's no startup cost. There's no small print or gray area. If you're writing, you win. Boom, you're off to the races. Let's keep moving forward. What I want to talk about next is everything you need to know in one image. Okay, so as you know, we have over 100 life and annuity and supplemental product carriers. It's very hard to keep tabs on everything. The industry is moving so fast, especially with the latest technology, right? We just saw, in fact, today, Banner Life just raised their max face amount to $5 million on our Insure Me Now Direct platform. $5 million instant decision direct to consumer. That's insane. I mean, just a few years ago, it was 500,000 and then a million, right? And then 3 million. Now it's 5 million. Instant decision term. It's truly instant, by the way. Okay. Again, standard or better. There's no gray area. Okay. So run with this stuff. All of the updates are in our 411 newsletter. Life and annuity is included. It'll be sitting in your inbox every other week. Let's keep moving forward. 2 social media posts that are targeting annuity sales. These are working great from agents just like you out in the field. Okay, they're no different than you. You should be doing the same thing. Don't reinvent the wheel. Just change a few spokes. Right? This is not rocket science, folks. Left hand side. Let's check out this quote: "An annuity is a pension that you provide for yourself." That provided almost 200 leads for this agent. Okay, is that rocket science? No. Look at the right-hand side. I love this. Talk about zero is your hero, right? S&P returns versus indexed annuity S&P 500 returns on an FIA product. Okay, you're not going to see one negative return. Okay, all locked in. Zero is your hero. Left-hand side, you're going to see the negative. So what does this do? It tees up the FIA sale questions and comments and new leads for you. Okay, almost 100 new leads for that agency. So I love to see this. You should be doing the same thing. Let's keep moving. This is the podcast. Now, you talk about, hey, Bill, yeah, I'd love to pick one of your agents' brain, for 20 minutes to see what's working for him or her that's crushing it on the annuity side. Okay, we did exactly this. So on the bottom right-hand corner, that is Ron Smith, who, by the way, is also on the call. So thank you, Ron. Ron sat down with me for an hour. Okay, he's one of our top annuity agents, qualifies for most incentives, trips, all the above, just on the annuity side. So I sat down with him for an hour to see what works, what's hot, what's not, what do you recommend. Check that one out when you get a chance, episode 62. Right above that, I have episode 64, the CEO, Scott Perry of AmeriLife, an amazing guy. He has built that company like there's no end. It's unbelievable. Okay. And they have completely changed course. We are now a partner affiliate agency IMO with AmeriLife. So you got to listen to his story. It is awesome. So that's 64, 62. And then I just found out 2 days ago, Gary V is back. Gary Vaynerchuk is back for a part 2 podcast episode coming up in the next few months. I'm going to send out an email about it. It's going to be focused on sales and marketing in 2026 and what platforms should you be using, right, to make a splash and to gain new prospects and clients, right, to get the word out and build your reputation and brand. So that one is coming up around the corner. I'm super excited about it, as you can tell in my voice. All right, almost done. Tomorrow, and I know it's a 2 minutes late, but I had to get that out. Tomorrow, if you're in South Florida or want to make the drive down, we have a breakfast training with Transamerica on their new instant decision, permanent and term platform. Plus, we're going to have an AmeriLife guest speaker joining us. Josh from the Annuity division will be there, myself, a few others from our marketing team. Don't miss this, complimentary, but you got to register like right when we hang up. Okay, so make sure you let us know if you want in. Let's keep moving. This is a menu of our training events that are coming up around the corner. You can take note. We'll also send out a thank you email that'll be in your inbox tonight, and we'll include the Coach Chris presentation, his slides, and then, of course, everything that we touched on. Most important, on the bottom, I just found out, in fact, yesterday too, Joe Ross. He is, in my opinion, the #1 IUL sales coach, period. He is back. He just committed right after the expo, May 14th. That's going to be awesome. Okay, he's going to talk about the latest IUL sales strategies and his $3 a day sales idea. Okay, awesome napkin presentation for IUL. Last slide here, and we'll put a bow on this. First, left-hand corner, we're going to talk about my Positive Tuesday quote, right? Don't listen to what I say, watch what we do. Proof is in the pudding. I put this out every week. What does it mean, Positive Tuesday? Absolutely nothing. It's just a way to brand, get the word out, right, to our agents. You should be doing the same thing for consumers, right? Remember, IUL Thursday, LTC Monday, call it whatever you want, but you got to get your name out on the big 3 platforms at the minimum. Your dreams become reality when your thoughts become your actions, right? The words don't mean anything. You got to put the action plan in place. My question of the day, make sure you get your little fingers on the keyboard because you got to answer first and you got to be correct. I spoke about 2 of our complimentary annuity e-application platforms. Tell me the name of the 2 platforms and you win an Apple iWatch, an IUL prospecting book. Okay? So you got to be first and you got to be correct. 2 of our annuity e-application platforms that are now available to you, ready to go in our website. 100% complimentary. Andrew, who was first? Who was correct?
Okay, we have Janine C. Janine C.
Janine C., congrats. It's a firm for annuity and Firelight, 2 complimentary platforms ready to go. Try them out when you get a chance. Let me know your thoughts. I know we're, in fact, 3 minutes over, and I apologize, but I think this was worth it. We had a lot of great info today. So thank you again for hanging in there, and keep your eyes peeled for our thank you email, and hopefully we'll see you tomorrow morning in South Florida. Great selling, everyone.